Moving your LLC to a different state doesn't have to be complicated. When your business needs to relocate, understanding the right approach can save you time, money, and legal headaches. Merging an LLC from one state to another is a strategic way to relocate your business while preserving its operational history, tax identification number, and assets. This process is particularly valuable when states don't permit LLC domestication or when maintaining a clean legal transition is essential. The most common approach involves forming a new LLC or corporation in your target state and merging your existing LLC into it. This process begins with creating a comprehensive merger plan that outlines the terms, including ownership structure, asset transfers, and liability assumptions. Next, you'll need to register a new entity in your destination state. This becomes the receiving entity for your merger. Once established, you must obtain approval from the members of your original LLC according to the requirements in your operating agreement. Filing the Articles of Merger is a critical step that must be completed in both states. Some states automatically terminate the original LLC upon filing, while others require separate dissolution paperwork. The benefits of this approach are significant. Merging across state lines maintains business continuity and contracts, avoids the administrative burden of managing two separate entities, can preserve your EIN and tax elections, and simplifies accounting and reporting requirements. However, there are important considerations to keep in mind. Each state has unique requirements for mergers, including different filing specifications and fees. You'll need to address state tax registration, business licenses, and potentially revise the operating agreement of your new entity. Additionally, you should notify creditors and update contracts to reflect the surviving entity's jurisdiction and name. The tax implications of merging an LLC vary based on several factors. These include whether the surviving entity is the LLC or corporation, how the LLC chooses to be taxed for federal purposes, the tax status of any corporation involved, and whether ownership remains consistent after the merger. If your LLC elects to be taxed as a corporation, the merger will generally qualify as a tax-free reorganization under Federal Income Tax Code. Different tax treatments apply based on your specific situation, making professional tax advice essential. Before deciding on a merger, consider the alternatives. Domestication allows you to convert your LLC from one state to another while keeping it legally intact, but not all states permit this option. Foreign qualification enables operation in multiple states while maintaining your original LLC, which works well for gradual transitions or multi-state operations. The legal process for merging across states requires careful attention to detail. You'll need a well-drafted merger agreement specifying which entity survives, how ownership interests transfer, and how debts will be handled. Filing requirements in multiple jurisdictions must be met, and you'll need to update licenses, bank accounts, vendor contracts, and notify relevant tax authorities. For businesses with jurisdiction-specific permits or licenses, verify whether these will transfer to the new entity or require reapplication. Many business owners wonder if they can move their LLC without forming a new entity. This depends on whether your states allow domestication. Regarding taxation, properly structured mergers often qualify as tax-free reorganizations if ownership continuity rules are met. The timeline for completing a merger across states typically ranges from a few weeks to a couple of months, depending on state processing times and document preparation. In many cases, you can keep the same EIN when merging, especially if there's no change in ownership or business structure. Given the complexity of merging an LLC across state lines, working with an experienced business attorney is highly recommended. They can help navigate the specific requirements of both states, ensure proper filing of all documents, and address the transfer of assets and liabilities correctly.